Hello everyone, I am Adarsh, lecturer in Vidhyaashram PU College, the Temple of Excellence. So my subject accountancy. In accountancy I have taken topic called accounting ratios. Now we are in session 6. Now in the previous session we discussed about the types of ratios and also out of 4 types, first and second type we already completed problems. What is first type? The first type is liquidity ratio. Under liquidity, we worked out what is current ratio and what is quick ratio. Second type, we discussed solvency ratio. Solvency means what? It is for long term. Under solvency, we worked out debt equity ratio, debt capital employed ratio. So, we discussed all 5 type of ratios under solvency. In the today's session, we'll discuss about the third type of ratio that is called as profitability ratio. Very important for your examination concern. You may get 1 mark question on this as well as 12 mark question on this kind of ratio. Under profitability ratio, we have sub-classification. We will discuss each and everything with problems. In today's session, we'll discuss and work out 2 problems on profitability ratio. These are called as profitability ratio. Along with profitability, we also include turnover ratio. The turnover ratio is also called as financial ratios. To do your profitability ratio, we need help of this turnover ratio also. Clear? Now, we will discuss each and everything one by one with formulas as well as explanation. First, we will discuss about turnover ratio, then we'll go for profitability ratio. So, in today's session, we'll discuss these 3: inventory turnover, trade receivable, trade payable. These 2 we will discuss in next session. Now, inventory turnover. Inventory means, always remember, inventory means stock. Trade receivable. Receivable, always remember, this is your sales. Trade payable. Payable, you remember, this is all about your purchases. Now, what is inventory? Ratio on stocks. What is trade receivable? When you sell your goods, you have to collect money. Normally, the sales happens on credit basis. Credit basis means you sell your goods, but payment will be collected after 1 month, after 2 months. That we call it as receivable part. The receivable means the amount will be collected or receivable later. Then how much you will receive every month, how much you have collected, how much is pending, everything is analyzed in the form of ratio. For that reason, we do trade receivable ratio. How much is your sale and how much you received or collected. And what is the turnover of your collection? Turnover means what? Inward and outward. Now, trade payable. Similarly, what you work with sales, same thing purchases also. Purchase. You purchase goods and promise that I'll pay money next month. That only. Your payable means how much you are paid every month, how much you are paying every month. Those things will be calculated in this. Now, inventory. Inventory means what? Stock. Now, you cannot keep stock more. Why? Because you have to pay godown charges. If you are keeping more stock means there may be chances of pilferage. There may be chances of evaporation. There may be chances of damage. So, everything we have to keep it in mind. How much stock we should store. How much stock we should purchase. So, everything will be planned properly so that your cost should be less. For all these purpose, we prepare turnover ratio. So, in the today's session, we will discuss these 3. The formulas I explain you while doing problem. Next one, profitability ratio. Normally business runs for what? To earn profit. Unless there is no profit, no meaning of running business. Now, what is profitability ratio? In this you will get gross profit, operating and net profit. So, in your ratio, profitability ratio, we have two types. One is return on sales, return on investment. How many types are there? Two. Return on sales, return on investment. Now, these three we call it as return on sales. Sales, how much you sold. On that, how much you received. Means what is your profit. I'll explain you what is gross and what is net. What is gross means your direct income minus direct expenses. Whatever profit you get, that is gross profit. Means what are the direct expenses? Your purchases, wages, any coal, gas or power, all comes under direct expenses. I'll show you with profit and loss account so that it will be clear. Now, so what is net profit? After this, we minus all salary. If there are any rent, normal expenses, printing and stationery, electricity bill, everything we minus. After that, you will get net profit. What is this? Gross profit, and this one is net profit. These two will be compared. Compared with what? Compared with sales. If your sales is 100, your gross profit is 10, so your gross profit ratio is 10%. Now, your sales is 100 and your net profit is 5. What is your net profit ratio? Your net profit ratio is 5%. Means if you do 100 rupees sales, your profit will be 5. If you do 100 rupees sales, your gross profit will be 100. These things will be calculated under profitability ratio. Now, operating ratio I'll explain you while doing problem. Similarly, the formulas for these three will discuss while doing problems. Now, what about earning per share? This we'll discuss in your next session. So, as I told you, there are two types, return on sales and return on investment. This comes under return on investment. For example, you have invested on shares. Then, how much you are earning from that? That is called as return on investment or earning per share. Next topic, return on investment. As I told you, in the next session, in detail, we'll go for this. Okay. Now, I'll give you a brief idea about what is return on investment. Now, you have purchased shares of some company XYZ. You paid 10,000 for that shares. Now, that company is running under profit, luckily, and you got 1,000 from that company as what? Dividend. Whatever profit the company earned, that will be issued to the public as dividend. So, out of 10,000 your investment, how much you got? 1,000. What is your income? 10%. This is called as return on investment. You have invested 10,000 and how much is your return? Your return is 1,000. Your return on investment is 10%. Clear? This is called return on investment or ROI. On this, we'll do problems in the coming session. This problem number 1, you have to find out total 6. Inventory, receivable, payable, gross profit, operating as well as net profit ratio. Now, how many formulas you have to learn? You have to learn total 6 formulas for 12 marks. Sir, it is difficult to learn 6 formulas. The answer is no. Why? Because for everything we have shortcuts. If you follow that shortcuts, it will be easy to remember all 6 formulas. Now we'll go for these 3. Profitability ratio. As I told you, these 3 comes under profitability and these 3 comes under turnover ratio. Now, first one is what? Gross profit. I'll write it here. Operating profit. And the last one is net profit. How to remember formula? Now, for everything should be multiplied with 100. For everything should be multiplied with 100. Now, denominator base will be net operating revenue. What is this? Net operating revenue. You also call it as sales. Sales, net operating revenue, both are same. But in examination, normally they will not give you word called sales. They will give you as net operating revenue. Now, same thing, net operating revenue, net operating revenue. What do you mean by net operating? It is called sales. Now, for gross profit, operating and net profit, what is a common thing? Denominator, net operating and net operating multiplied with 100. So these are the common thing. Easily you can remember. If you can't remember this word, you can write it as sales. Now, which one is this? Gross profit. So you can call it as gross profit. What is the formula for gross profit? GP divided by sales into 100. Now, net profit. Net profit divided by sales multiplied with 100. These 2 formulas are easy. Yeah. Now, what about operating ratio? Operating ratio formula is cost plus operating expenses. So, what is the formula for operating ratio? Cost of revenue plus operating expenses. The calculation part I'll teach you while doing problem. Just you have to remember these formulas. So this is all about your profitability ratio. Easy to remember. What is the denominator? Sales, sales, sales. Multiplied with 100. For gross profit, it must be GP. For net profit, it must be NP. But operating, you have to take 2 things. One is cost of operation plus operating expenses. This is a formula for your profitability ratio. Now we'll come to your turnover ratio. How to remember? Similar. Now, first, second and third. Same shortcut we will use. For this, you will not get multiplied with 100. Why? Because these 3 answers must be in the format of ratio. These 3 answers must be in the form of times, 2 times, 3 times. So, multiplied with 100 will not come under turnover ratio. Now, these 3, the common thing is average, average, average. What is the base? Base is common, it is average. Now, inventory turnover ratio, average inventory. Trade receivable turnover ratio, average trade receivable. Trade payable turnover ratio, average trade payable. So these are the base or denominator. So for everything, average is common. Along with that, If it is inventory turnover ratio, average inventory. Receivable turnover, average trade receivable. Payable turnover, average trade payable. What comes here? Now, if it is inventory turnover ratio, remember cost of revenue. Remember cost of revenue. Now, if it is trade receivable ratio, then it will be your net sales. It will be what? Net sales. As I told you, receivable means what? Sales. Payable means what? Purchases. So, purchases. So, normally instead of net, you can take it as credit purchases and credit sales. Clear? Yeah. So, you have to learn these 6 formulas. Easy to learn and easy to learn. Better in your sheet, please write down these shortcuts so that you can remember easily. While doing 1 or 2 problems, keep the formulas with you. So by seeing formulas, you can work out. From the third problem, without seeing formulas, you have to work out. Now, what is the first one? Inventory turnover ratio. We'll work out one by one. Now, what is the first one? Inventory turnover ratio. Now, what is the formula for that? Cost of revenue divided by average inventory. Now, come to your question. Do you have cost of revenue? No. Do you have average inventory? Yes, your average inventory is 1 lakh. So, what is your cost of revenue? Simple. If the cost of revenue not given, your revenue minus gross profit is called as cost of revenue. Normally they give you directly. If it is not given, simple calculation, your revenue minus gross profit is called as cost of revenue. Means total income minus profit is your cost. Clear? Now, 10 lakh minus 2 lakh, what is your answer? 8 lakh. 8 lakh divided by 1 lakh is your first type of ratio. Clear? We'll go to answer. See, inventory turnover ratio, cost of revenue divided by average inventory. What is your cost of revenue? 10 lakh minus 2 lakh, your answer is 8 lakh. 8 divided by 1, your answer is 8 times. Any doubt in this? This is called inventory turnover. Sometimes average inventory. Inventory means what? Write down there itself. Inventory means stock. Now, if the average inventory is not given, how to find out? Now, opening stock plus closing stock divided by 2. Opening stock plus closing stock divided by 2 is called as average inventory. Normally they give. If they are not given means like this you have to find out. Now, next, trade receivable turnover ratio. What is the formula for trade receivable? Now, trade receivable ratio formula. Formula is sales divided by average trade receivable. Now, so what is your sales? As I told you, sales means revenue from operation. Your sales, we know that it is 6 lakh. Now, what is your average trade receivable? Average trade receivable is 1.5. 6 lakh divided by 1.5. Your answer is what? It is 4 times. So, this is called as trade receivable turnover ratio. Remember formula and get to know how to write numbers for this. Easy. See, your net credit revenue from operation means sales, as I told you, will go for net credit. We will not go for overall sales, we will go for credit sales. Your credit sales 6 lakh and your average receivable is 1.5. Clear? Now third one, trade payable turnover ratio. What is the formula? Net or credit purchase divided by trade payable. Now, what is your credit purchase? 5 lakh. What is your average payable? 2.5. Just divide. Easy. We'll see the answer. 5 lakh. And average trade payable is how much? 2.5. So what is your answer? 2 times. Easy? Yeah. But you have to remember formulas. Now, the fourth type of ratio is gross profit ratio. Simple. Gross profit divided by net revenue multiplied with 100. We'll go to question. We have gross profit, operating and net profit. Now, gross profit, what is the formula? Gross profit divided by net revenue from operation. Yeah, gross profit is how much? 2 lakh. Revenue from operation how much? 10 lakh. 2 lakh minus 10 lakh multiplied with 100. Easy. Next, your net profit ratio. What is your net profit? You have 1 lakh. And what is your revenue from operation? Similar, 10 lakh multiplied with 100. See, this much only. You have to remember formulas and you have to simplify with numbers. Now, last one, operating ratio. These two solutions again will discuss. Now, operating ratios. Now, operating, as I told you, cost plus operating expenses divided by your total net operating revenue. We'll discuss in the solution itself. Now, gross profit ratio, you have 2 lakh as gross profit as well as you have net revenue from operation, that is 10 lakh. 2 lakh divided by 10 lakh multiply with 100, you will get answer called 20%. Now, gross profit will be given directly. Net revenue will be given directly. Just you have to multiply with 100. You will get your answer. Next, your payable is over. The last part is operating ratio. Operating ratio, what is the formula? Cost of revenue plus operating expenses divided by net revenue from operation. Now, cost of revenue already calculated. That is how much? 8 lakh. Now, operating expenses given in the question itself. Just check your question. In the question they have mentioned operating expenses is 1 lakh. Now, 8 plus 1, how much? 9 lakh. Divided by 10 lakh multiplied with 100, you will get answer called 90%. Now, your operating ratio is 90%. Now, cost of revenue from operation, as I told you, your revenue from operation minus gross profit. Revenue from operation minus gross profit, you will get cost of revenue from operation. And the last thing is net profit. Net profit they have given 1 lakh. Revenue is 10 lakh. This is 100. Your answer is 10%. Clear? So like this, you have to work out. You have to check each and everything. Then only you will get to know. So what is the formula and how to simplify. In today's session, we discussed about profitability ratio as well as turnover ratio. So what is your homework in this? After doing all these problems as well as formulas and explanation, you have to write down the problem as well as the formulas. After writing that, you have to solve this without seeing the class. So that will be your homework for today's session.